So some underwriting guidelines to consider. The main thing I need to know for a lessor's risk is what type of tenants are in the building. That's going to determine what markets I can go to. Because, if you've got a wood manufacturer, I'm going to tell you a preferred market's not going to take it. So you're going to have to go to an E&S type market. So we want to know the difference, the types of tenants in the building. That's extremely important. Your most preferred type would be your professional office tenants, because you're going to have less foot traffic than you would, say, a retail strip mall, where, people are coming in and out of that place all day long. And then we also, so anything that's warehouses, retail stores, light manufacturing, those are all great. The harder to place type tenants generally are ones that have garage repair type risks, restaurants, furniture, wood manufacturing, and cannabis-related tenants. We can consider them. It does vary by what their operations are, if they're a grower, a manufacturer, or if they're a retail store. We have markets that we can look at those. I know it's becoming a growing industry, so it's definitely something that we can take a look at. And then if they have multiple tenants, generally speaking, if you're a good building owner, you would keep what we call a rent roll, which provides you with a list of your tenants, the square footage they occupy, and then, what their monthly rents are, and then any other information as that building owner wants to keep on file for them. So a rent roll is really important to me, because if there's multiple tenants, it helps me, A, determine where I can place the risk, and B, it breaks it down for me based on the square footage, because sometimes, if it's heavy on one side and then a little bit lighter with the types of tenants, it will definitely affect the types of tenants that the carriers that I can take it to.
So, Michelle, we've got a question that I think you can answer. What is the oldest building you can insure? For example, something that was built in 1948.
I can definitely write something that was built in 1948. I think the oldest building I've ever written was built in the late 1800s, like 1890. But with the older buildings, and definitely we'll get into this on our next slide as well, so if any of you want to jump to that slide, we can talk about that. So for the older buildings, it's not a problem. I actually like the older buildings, but for the older buildings, we're looking for complete and full updates to the wiring, plumbing, heating, and roof within the last 30 to 35 years. It varies by carrier. For them to be able to qualify for special form replacement costs. If they don't have the updates, and the older building and they still need the coverage, I can definitely write it as basic ACV. With the older buildings, if they don't have the updates, it will limit the markets I have available, because some carriers are pretty particular about what age they will start writing buildings at. Some of your preferred markets are, wanting things from 1970 and later, and even 1970 for them is starting to get a little old on their side. So, but I do have markets that will consider those older buildings, no problem. With the updates is much more preferred, because it opens up some more markets for me. Without the updates, we're generally looking at E&S type markets for where I could take those ones. And again, it would be basic form, and then ACV for your valuation. So the building itself, I've seen some older buildings that look nicer than buildings that were maybe built in the 90s. So, again, it comes down to your pride of ownership and how well you're maintaining the building.
Another question came in about historical buildings.
Historical buildings are a little bit tough. I generally can only consider those with E&S markets. I don't get too many historical building requests. I have come across a few in the past, but I don't get them very often. So we're definitely not a niche in that arena. So I don't know if there's other markets out there that, specialize it and are, giving them coverages that would apply more to historical buildings, but I can consider them. They're just not the easiest for me to write. All right, some other things to consider about the building, other than the age. How many stories is it? That will become a factor, because once you get over a certain number of stories, we wanting to know, especially if it's frame, and in California, if it's frame construction, generally over 3 or 4 stories, most of your markets are looking to see if that building's sprinklered. Obviously, on the older buildings, it's most likely not. but I do have markets that will consider non-sprinklered buildings, over a certain amount of stories. That's not a problem. But again, sprinklered buildings, yeah, that's great. They generally has a room to offer you another credit available if your building is fully sprinklered. Other things to consider, all these things that are listed are definitely things that would be checked on in an inspection, which most of our lesser risk, with whatever carrier replacing it, will most likely have an inspection done on the building itself to see the condition of it, make sure we're rating it properly, and make sure we're helping the building owner, lessen their chance of having a claim. So you would want to make sure that your sidewalks aren't uneven and the parking lots are paved and don't have potholes in them, so people aren't tripping and falling, and then turning around and suing the building owner for hurting themselves while at their premise. If there's multiple stories and there's a stairwell and there's upstairs and there's railings, you're wanting the railing width, generally speaking, 4 to 6 inches. 4 is better than 6. Once you get over 6, nobody really wants that. So you would need to be either looking at redoing the railings or inserting some sort of like mesh in front of it to, protect people from, especially toddlers or small children, from falling through. And we're looking at vertical railings instead of horizontal. Horizontal railings are, I know, becoming something contractors are liking to put in newer buildings right now. I've been seeing that a lot lately, but on insurance purposes, it doesn't really work for us, because if you have a horizontal railing and you've got multiple, it almost acts like a step ladder. So you can just climb right up and then get to the top and say you're a toddler and then fall over. So again, if you have horizontal type railings and that's found in an inspection, one of the cheapest ways to correct that without having to redo the whole railings is to insert some sort of like mesh around it to protect it so you can't climb up and down it. And then we were also, your tenants for the building owner, they should always be naming their building owner as an additional insured on their policy, and then providing the building owner with a certificate of insurance, proving that they have their own insurance in place, and that is something that is required with all of my carriers. So if, as a building owner, they don't require their tenants to carry insurance and provide them with a COI, I won't be able to assist you, because again, this is something that they're going to confirm in an inspection, or they may even require the certificates of insurance at time of buying to prove that their tenants have the coverage in place.